Hello and welcome back to another video. I know it has been a while, so please do subscribe. Please do subscribe to this channel, and I hopefully should be putting out more videos with the more subscribers I see that come along for the ride. So let's get right into it. This is a stock that everyone knows. Almost every, fund, index fund, mutual fund that's like, value owns it. It's just a steady, stable company, of course, because it's ran by Warren Buffett. So this company and this stock, basically acts like the S&P index on its own, just the way that it's built. So with that being said, this is Berkshire Hathaway B shares. So Berkshire Hathaway, as of 9/26/2022, was trading for around $265 a share. You can actually see it in real time over on the left side of my screen. This is a moderate buy with one buy rating, and they don't give a price target because it's kind of hard to tell. But then the stock analysis of it, they actually gave a smart score for Berkshire Hathaway of an 8. It was an 8 over here. Now it's locked, but yeah, before it wasn't. So that's pretty good. That's a pretty good stock then. If you're anywhere above between like a 7 and a 10, that's a really good stock. 6 and under is kind of questionable. So let's look at some of the financials that we can actually view for this company. So as of right now, it has a market cap of about 585 billion. That's pretty big. It has a 1-year estimate as of Yahoo Finance's estimates of about $356, which is pretty good. That's almost a $90 difference from where it is right now at 265. So you've got a lot of room to grow there, and it's also near the fair value for what its research basically says. If we look at the statistics for Berkshire Hathaway's financials, as we can see, it has taken a dip since March of this year as far as market cap. It's gone down almost 200 billion in market value, and it's the lowest it's been in at least over a year. So that's the story with almost every company, though. That's basically how it's been going these days with every single company. Profit margin, they do eke out a profit margin. Again, this thing is a behemoth, so the fact that it has a profit margin to begin with, that's really good. Operating margin, 5.44%, that's pretty good too. Revenue is about 289 billion. Again, like I said, this is a behemoth. They make a lot of money in a lot of different ways, and a lot of that has to do with how Warren buys private companies that then are the revenue driver of Berkshire Hathaway, and that doesn't include the actual investments in things like Apple. He doesn't own Apple, he just has an ownership stake in Apple, but he doesn't own Apple outright, so he doesn't see those revenues as part of Berkshire Hathaway. Quarterly revenue growth, that's what we always want to see, a good sign of positive double digits. And then we don't have that quarterly earnings growth, but that's okay. It is still profitable, obviously, which is what you want to see. Total cash is about 105 billion. That's a lot of cash on hand, and they can do a lot with that in terms of buybacks, especially since the stock is so low and it's becoming near fair value. I'm sure that they're going to be doing a lot more buying. And then total debt is about 119 billion, and again, that basically comes with it being, owning all these different kinds of businesses. They definitely have some debt with them. With that being said, it looks like, they don't do splits really. They never pay a dividend because they don't see the value in doing that. They would rather retain the earnings and then reinvest by buying other companies. But again, sitting on 105 billion in cash, that's not what you want to see. And Warren Buffett himself has been very open about that yes, they want to be buying companies, but they really don't like holding cash for a long time, especially a large amount of it. So it's just interesting that it has kind of gotten up to that kind of pile. He has been buying a lot of, on the investment side for him, he has been buying a lot of Occidental Petroleum. So that is, that's like natural gas. So that is something that he has steadily been buying billions and billions of. So that's how that's been working. As we can see, it is below the 50-day and the 200-day moving average, usually meaning that it's in like a bearish pattern. But again, so is every other company. This isn't just significant to significant to Berkshire. This is for everyone. If we look at like a portfolio of Berkshire, let me see if I can get my portfolio back here. But if we look at like a portfolio of Berkshire, we can actually see that if you invest $10,000 back in 1997 when this data is available for it, that you actually have an ending balance of 126,000, which is about 10.38% minus, about 3% for inflation, 2.5% for inflation. We're actually coming in at about 7.73%. This is on standard basically with like the S&P. So if we actually throw in a benchmark to this, let me try to pick out Vanguard 500. If we try to see what this stacks up against, it actually does better than the S&P over the same time frame. So Berkshire has consistently met or beat the S&P, and that's what you really want to see. It is better best years, and it has less worst years. Even the drawdowns aren't nearly as bad as the total of the S&P, and so that's what you really want to see. Again, this is a short video, so thanks you guys for watching. Please let me know what you think, and I will see you later.